And how much shoppers will spend this holiday season could have a lot to do with the Federal Reserve.
What could be the first in a series of rate cuts might happen this week, and that should make borrowing more affordable. The current rate of 5.5% is the highest in more than 2 decades. Jonah Kaplan reports on what this could mean for you, your money, and your family.
Let's rewind to spring 2020.
What we want to do is we want to make sure they all stay together.
The federal government, led first by President Trump and then President Biden, pumped trillions into the U.S. economy to save jobs as COVID restrictions aimed to save lives. Flush with cash, Americans went shopping, but that drove up prices and inflation. The Federal Reserve then raised interest rates to make borrowing money more expensive, thus incentivizing saving rather than spending. It's worked. Prices are coming down, but not enough to help consumers. Nick Rudek is in the market for a new couch.
You know, maybe like $300, $400. And it's like, nope, $600, $700. And I'm like, we definitely are a lot more cautious about the things that we buy.
But if Rudek and others are more cautious and stores' inventory piles up, businesses then won't generate the revenue needed to pay their employees. That's the risk of recession. Next spring will mark 5 years since the start of COVID. So clearly these economic swings, they don't move quickly, but they can change abruptly. So will a rate cut from the Federal Reserve mean instant savings? Analysts we spoke with caution no. It's just meant to ensure a soft landing. Lowering the benchmark rate will directly affect credit cards and car loans, smaller short-term purchases as opposed to real estate. The Fed's moves could make a difference in mortgage rates, but they've already come down from the 8s to the 6s. And broker Michael Kopieski explains those are affected by other factors like job reports.
The jobs influence what people do as far as shelter-wise and how much they can afford shelter-wise.
For homeowners interested in refinancing, Kopieski says the number that matters there isn't the mortgage rate, it's the size of the loan and the number of years you plan to live in your home.
If you think that you're going to get your money back within 3 years or less, then take a look at it.
The Fed's decision could come as early as Wednesday. In Minneapolis, Jonah Kaplan, WCCO News.